Welcome to our 24/7. My name is Niharika Valia and I am with you with the area of accounting and financial management for bankers. Okay, so when we look forward to this particular class, I hope I am audible as well as visible. Okay, so starting with the area of cash flow statement. When we define the cash flow statement, it is as per accounting standard 3. It is given as per AS3 where cash flow statement is about the movement of cash. It can be inflow, it can be outflow, and it also can be no flow. No flow means cash and cash equivalents changing their forms. For example, cash or bank balance or the marketable securities. If we take up all these three things, then cash, bank, or marketable securities, if we take up these things, three things, bank becomes cash, cash becomes bank, whatever happens in this case, whatever we are doing with this particular scenario would be taken up here. Cash flow statement is basically the movement of actually changing the form of these things. Maybe I deposit money into the bank and maybe I take money out of the bank. That is movement of the bank balance. Movement of bank balance to cash, cash to bank. There is no difference further. That is cash and cash equivalents. Then we have inflow and outflow. If we talk about inflow and outflow, either we are having inflow of money, that money is coming to us, or money is going out of our hands, right? That is either inflow of cash or outflow of cash. So here comes the first question. The first question says that cash flow statement is based on which basis of accounting? Cash flow statement is based upon cash basis, accrual basis, hybrid, or none. If we talk about the cash flow statement is based upon only and only cash inflow and cash outflow. It is not based upon anything else, right? Because now if we talk about the cash inflow and cash outflow, cash is only looking forward to tracing down the movements of cash, nothing else. We're just limiting our movements to the movement of cash. That is, it is cash basis of accounting. Okay, before I proceed further, let's talk about a few basics of cash flow statement. If I talk about the CFS now, in terms of CFS, we have three levels. The first level of CFS is operating activities. In terms of operating activities, what do we do? In terms of operating activities, we prepare the books of accounts as per the functioning. Whatever we do in terms of operating accounting is whatever we are doing in our business. Either we get money into the business or either we lose money out of our business. That is operating activities. Then we have investing activities. Investing means if I put money into the fixed assets or I lose money out of the fixed assets. That is what we call as investing. And then when we talk about financing, in terms of financing, we have a way of financial working now. That means in terms of financing, we either get money into the business or either we lose money out of the business. We have capital inflow or capital outflow. Sometimes the capital might be eroded even na, because of the losses and everything. So what we do is sometimes we redeem the capital even. In terms of preference shareholders, we pay them back. That is capital. But also we take long-term loans to keep the business going. Isn't it? That is financing. So in terms of the accounting, what happens is when we are starting with the area of accounting there, in terms of accounting, whatever we do, it is based upon the fact that we do the cash basis of accounting with three activities: operating, investing, and financing. Operating is doing the business, investing is investing money into the fixed assets, and financing is when you have any specific capital or any long term loan on which you are trying to work upon. when a fixed asset is acquired on hire purchase. Interest expense is classified under dash and loan regarding such purchase is classified under. See, if I purchase a particular asset on hire purchase, then the interest that we are paying on that particular asset is basically investing or operating activity. Then operating and financing activity, or financing and investing activity. When we are just limited to the area of sorry, it is related to the interest area, then it would be only the financing activity, because whatever interest we are paying is a part of the finance, and whatever is something that is based upon the working upon doing something. Now, when we are making an asset, basically what has happened is I build a particular machinery for the organization. If we buy an asset on hire purchase is what we purchase an asset, and we make the payments of that particular asset accordingly. So in this case, when we talk about the financing activities are those activities which are related to the area of the working of the business in such a way that that is related to the loans. Financing is what? From where I'm getting the money. And that is in terms of investing, where I'm putting the money. I'll be putting money in the fixed assets. And I'll be taking the money out of the business sometimes for my personal purposes or something. That is something that we call drawings, but that happens in only in sole proprietorship. In terms of the companies, they do not leave people, they don't tell people to take away their capitals, right? So financing activities are basically those activities which are related to the fact of the capital there. In terms of the capital, how do we look forward to it? In terms of capital, if there is a redemption or you pay back any loan, it's minus because you lose money. And if you gain money, that is something that we define as issue of capital. When you issue more capital, it would be added. Okay. So here comes the next question. Cash receipts from licensees is an operating, investing, financing, or none. If we receive money from the licensees, okay. If we talk about the licensees, it is basically an operating activity. Licensees clearly says that we provide license to the people. That licensing is our day-to-day activity. That is what happens now. Because you're receiving multiple money from the licensees. That means you are giving license to multiple people. So it is a day-to-day activity. Whenever you find any day-to-day activity of a business through which they are earning, that is always called an operating activity. Next question. An increase in the balance of the retailer's merchandise inventory. For example, what happens is there's a wholesaler, then a retailer, right? And then we have the customer. So when there's an increase in the balance of the inventory of a retailer, he's working on a day-to-day basis on it, on a rare basis. Think about it. Is it operating activities, investing activities, financing, or none? If we talk about an increase in the balance of retailers' merchandise, this is a part of operating activities. Why? Because he is working on these goods every single day. This is not something he is doing for the first time. He had been doing it for years, right? So this is a particular thing that he does on a daily basis. So when we talk about an increase in the balance of retailers' merchandise, it is operating activity. Income tax on capital gains will be recorded in operating activity, investing, financing, or none of the above. See, when we talk about the capital gains, this means we have an asset, right? If we have an asset and we would like to sell an asset, what will happen? We will receive money. On that particular money we receive, we have to pay capital gains. When we are supposed to pay tax on it, why are we paying tax? Not because we are working on a daily basis. That's because we sold a particular asset and then generated income. This is a special income. Again, this can be positive as well as negative in an organization. But then, if you are paying tax on your assets, not on your, if you're paying this amount on your assets, not on the basis of the fact that we are doing the work on the daily basis. So it is operating activity. Sorry, it is investing activity. I was just telling the correct point and then said the wrong one. When we talk about income tax on capital gains is what? Capital gains is made when you are selling an asset. That is an investing activity. When you purchase an asset, you lose money. When you gain an asset, then if you sell an asset, you gain money. It's all about the money now. Cash flow statement is nothing but the movement of cash. If you sell an asset and you receive money, you, as soon as you received money, income tax department came and said you have got a particular amount that you are have earned by selling off an asset. You said yes. They said give me the tax. When you are giving the tax on it, that is an investing activity because you are investing in your businesses there, isn't it? The next point is underwriting commission on issue of shares in is which kind of activity? Financing activity, investing activity, operating or none. Based upon underwriting commission, it can be outflow, inflow or outflow. What would be the correct answer, everyone? Underwriting commission. See what happens is the organization underwriting commission can be defined as okay. The company issued some shares. Somehow they are scared that maybe people will not be able to people will not take up the shares. So what they did is they went to a bank and said that you take up the you I think it's better that you take up all those shares which people won't take up, because ultimately whatever we issued, 90% of the issue has to be subscribed by the people. Bank said okay, if the share would not be taken up by other people, I will buy those particular shares, but I need commission to give you that assurance. That is what they call it, underwriting commissions. See, now is it financing, investing, or operating? First of all, this is outflow of money. You're not getting the money. You're paying money to someone that please buy shares of my company, otherwise my public issue will fail. So it's way better that you take up that particular share. That is financing activity outflow. Why? Because you are getting the financing into the business and that is how you work. That is, it is a financing activity and it's an outflow. Next question. Compensation paid to the employees under voluntary retirement scheme is operating activity, exceptional item, operating activity, extraordinary item, financing activity, outflow, or none of the above. Any compensation which is given to the employees as a VRS, voluntary retirement scheme, when people are leaving the organization, where people are retiring from the organization, right? If anybody is retiring from the organization, then when we are retiring from the organization, then that particular person who's retiring will get voluntary retirement amount. Now, that is what they call it as VRS. But what will be? Normally, it is an operating activity. That is true. Why? Because the people are working with us, so there is an employee that is working with us, and that particular employee is being paid a specific amount. So first of all, it's an operating activity. But is it an exceptional item or an extraordinary? See, people don't leave the organization early every single day. That happens on a we cannot say on a very rare basis, but it is something which is less common, right? People normally achieve their particular age and only then they leave the organization. That is their annual age. If they're above 60 only, then they're leaving the organization. Otherwise, they'll stay with the organization, right? So when we talk about this particular area, then compensation paid to the employees under VRS is an extraordinary item. We do not do it every single day. It happens. So it's an extraordinary item. Then comes the dividend received by a financial enterprise is an operating, investing or financing or none of the above. If the dividends are received by a financial enterprise, Then a financial enterprise works upon the share market every single day. For them, buying shares and selling shares is just like we buy goods and sell them. For these organizations, it's not a very big thing. So when we talk about this area, these kind of things when they're happening on a daily basis, the dividend received by a financial enterprise is basically their operating activity. For us, for a person like me who invests in shares on a very rare basis, so and whenever I invest and I leave it, that is an investing activity because I'm getting the money out of it or I'm paying it through that now. It's a basically an accretion or addition in my fixed assets, or you can say my assets there. If it is an improvement in terms of my assets, it is a part of investing activity. But when we talk about it is not a part of my asset there, it is on a daily day-to-day basis that we buy and sell shares. That is an operating activity. Then comes amortization of goodwill is an operating, investing, financing, or none of the above. When we have goodwill earlier, it was there from after previous year 1920, or you can say after the year 1920, amortization of goodwill has been removed. In terms of income tax department, accounting is still considering it. Maybe in a few years this will also be gone from the concepts. But when we talk about this particular concept, what is amortization of goodwill? See, the organization has got a goodwill, so that we have to write it off now. And write it off means you reduce the value of it over the period of time, right? If we purchase some goodwill and over the period of time the value falls now, that is amortization of goodwill. In terms of amortization, it can be stated as something where is it operating, investing, financing, or none. If we talk about amortization, that is where the goodwill is being reduced or it is being depreciated. It's not something that is investing or financing because, excuse me, it's something that happens on a day to day basis, right? If it happens on a day to day basis, this is an operating activity. Next question. An example of cash flow from financing activity is payment of dividend, receipt of dividend, cash received from customer, or purchase of fixed assets. An example of cash flow state from financing activity is the cash flow from financing activity means you're getting money from our from the people who are your liability. It can be the owner itself or it can be any other person. So it is it payment of dividend or receipt of dividend, cash received from customers, or purchase of fixed assets. The example of financing activity would be payment of dividend. Why receipt of dividend or investment is basically because we are investing money somewhere else and we are recording it that way. Then we are recording it. It is called investing activity, right? Then in terms of investing activity where there is an addition to it, it is basically receipt on dividend on investments. Next is cash received from customers. If we receive it from customers, that is something that happens on day-to-day basis. Now it's operating activity. And then is purchase of fixed assets. When you buy a particular fixed asset and then you work upon that particular asset, it is called purchase of fixed assets. If we buy a particular asset and or we sell that particular asset, it is a part of investing activity. Then investing, cash received from customer is operating, and receipt of dividend on investment is basically investing. So just one of them is financing, that is the payment of dividend. How will you deal increase in the balance of security premium reserve while preparing the cash flow statement? Cash flow from operating activity, cash flow from investing, cash flow from financing, or cash equivalent? How will you deal the increase in the balance of security premium reserve? If there's an increase in security premium reserve, that means we are issuing shares to the people. If we are issuing shares to the people, we are getting money for the business. If we are getting money for the business, it's a part of the financing activities. Okay. So in this case, the correct answer is it is a part of financing activities because we are arranging money for the business. So when you are arranging money for the business, if additional money is coming, it's good for us, now rather than being bad. That's a financing activity. Okay, so this is it. Let's end the particular session today. I'll be meeting you tomorrow. But before I end my particular session, have you reviewed our courses yet? Our courses are there for the JIB as well as CIB examination. And currently, we are giving the best of discounts along with double validity on our Maha packs. If you're preparing for this examination, what to wait for? Let's look forward to it. What you can do is go to the area of JIB and CIB, preparing for JIB alone, not looking forward to the CIB just after that, then what you can do is you can take up the JIB 2023 area. There you get our selection batches. We have two selection batches there in terms of bilingual as well as the English medium batch. Both the batches are there. Let's look forward towards the area of the JIB examination. If in terms of the JIB examination, we have these batches come there in terms of AFM started on 6th of March, then RBWM 14th of March, IE and FS 17th of March, PPB starting on 31st of March. So in this case, what you need to do is click on the area of buy now and take up the course of buy for Y4 Y541. That is the code. If you apply this particular code, you'll get this particular examination for at 81% discount at 3999.80. That means for 4,000 you get this entire course, and there you have around 200 hours of live classes for all these four subjects for the JIB examination. And if you're looking forward to the examination, again, if you're looking forward towards examination in a proper way, you don't need only the syllabus, right? So if you're looking forward to that, other than syllabus, we also have got test series, numerical batches, and so many batches coming up. But how can we look forward towards all those batches? We have the JIB Ka Mahapack. Under JIB Ka Mahapack, you have got 600 hours of classes, the test series included, video courses included. Along with that, even 64 ebooks are also a part of it, right? So all these things are there. First of all, it is all live classes, mock test series, video solutions, revision batches, everything is a part of it. The ebooks are available, numerical batches, case studies, topic wise ebooks, all these things are available. So this is the best package for value of money, as you get the entire JIB with additional resources to look forward to with this particular process. Once you complete this particular, if you buy this particular pack, you don't have to look forward to anything else, because everything that you need for this particular examination is a part of this. What can you do there? If you're looking forward to this examination, just take this up, click on there of buy now, use the code Y541 and take it up at 6559.20. But the point is, it's not for 6 months, it's for 12 months. Think about it. Isn't this value for money? While the other one is costing you 4,000, this is costing you around 6560 rupees, right? Even though if it's 6560, the per month cost is definitely lesser here, and the resources here are way more. So if you're preparing for the examination, then let's look forward towards this course in an economic manner now. So if you're preparing for it, then go ahead and check it out in our website or in our app for further details. What you can do is you can take up the JIB Kamaha pack, or if you're looking forward towards both JIB and CIB, we have got the JIB and CIB Kamaha pack as well. That will have over 12 months of validity already. That means it will, once it's double, it become a 24, no, it is basically 24 month validity. Let me show you what can you do there. There it is for a 2 year period. That means for JIB as well as CIB, you can prepare for both. You've got 1100 hours of classes there. 72 test series are already there, many more to come. Then 412 videos, 105 ebooks. We are updating all the things as per the new syllabus. So you will get the best things among them. Rest assured, you can use the code by 541 and this particular course will cost you 10,799.20, and that too for 24 months. So for 24 months, if you're paying 10,000 something, that means the validity is definitely value for money. At this point of time, double validity is going on along with 81% discount. So if you're preparing for this examination, then kindly look forward to such kind of offers which are economically beneficial. Along with that, many of the resources are available for you. So preparing for it, then go ahead and check it out on our in our app or on our website for further details. And I'll be meeting you tomorrow at the same